Hey guys, welcome to another weekly focus. I hope you had a great week, and personally I think I had a good one. I'm going to show you guys the trades we had for this week and what I'm looking out for coming into next week. So let's go ahead and do a trade recap. So I'm going to pull this up. Alright guys, so the first trade I'm going to look at is the trade I had on gold. So this right here, I took this trade on the 9th of October right here. So I went in on the buys for gold. So if you look at this, once price started moving, I think once price was around here, I moved my stops to break even. So currently the price is, I think, somewhere around here. So we're just, I think, 1 or 2% away from getting to the target point on this trade. So that's it for gold. Now for US30, I had a buy position on US30. So this was on October 7th, and remember I had an attempt on this, I think on, no, that was different. So I had the buys on October 7th on US30. So this, I got in here on the buys on US30, and I moved my stop loss to break even at this point. And then as the trade progressed, as it played out, I was able to secure 2.92% from this one. Now if you look at what's happened on US30, the trade has actually moved again to the upside. But once I saw this pullback here and this, so there's a, on the lower time frame, there was a trend that was building up here, so there was a violation of this. So once I saw the violation, I closed the position at 2.92%, but the trade has reversed and taken off again to the upside, so that's cool. Now let's look at NAS. So with the NAS one, so I had a sell on NAS. So normally if you look at what like the previous forecast I did, I was expecting NAS and the S&P to pull back and they would take buys to the upside, which I actually did on the S&P. But when you look at NAS, once this prices took off, so it took off from here. So this was what played out during the week. We had prices moving from here all the way to this side. I was looking for sells just temporarily, just to deliver to the daily time frame so I can take buys again. So that was what I was looking at when I took this sales, but I closed this already at minus 0.5%, and then I went in on the buy on NAS100. So currently I'm in on the buy on NAS100. When we do the market focus, I will show you what I'm looking at on NAS100 on the S&P and my reasons for taking these buys. It might be a little bit too risky, but yeah, it's just 1% I'm risking on this, so I'm in on the buys on NAS100. Now let's look at the S&P. So with the S&P, I had sells. So the S&P and NAS, I trade them similarly. But before these sells, let's look at this one. So I had these buys as well. So I had the buys on the S&P on October 7th, the same time I took the trades on US30. So I went in on these buys and eventually moved my stops to break even once price had moved in my favor. So I closed this at say 2.76%. I closed US30 at 2.92%, and after that I went in for the sales. So with the sales on S&P500, this took me out, but with NAS I was able to close it at 0.5%. I was able to limit it, but with the S&P, this took me out. So I had a full hit on the S&P, that was a full loss on the S&P. So I made 2.76%, then I lost 1% here, but I'll reanalyze it because there's still a possibility for me to take buys. Price just needs to probably pull back, and we'll look at it once we do the focus today. And on BTC, let's see BTC right here. All right, let's see. So I went in on the buys for BTC, and I think this was really early, so I had an early entry on BTC. So I was going in on these buys, and my target was, I think, 66,500 and stuff like that. So this stopped me out at minus 1%, and the funny thing is now the trade is actually playing out. So I just went in too early and had a full hit on BTC, so that's minus 1% on BTC. Alright guys, so that's it for the trade recap, and let's see if there's anything that's popping up for today. So alright, so let's look at the DXY and we'll make sense of the DXY. Once we make sense of the DXY, it becomes very easy for us to analyze other pairs. So I'll start with the DXY on the daily time frame, so right here, and I'm just going to make this bigger and make sure this writing stays on the daily time frame. Alright, cool. Make this bigger. Alright guys, so here's the DXY on the daily time frame, And I think for most of the pairs, what I'll be doing today is probably just looking at it from higher time frames, say maybe the daily and maybe the 8 hours, because there's a lot that's building up, but you need to look at it from the highest time frame. Or for me, the highest time frame is the daily. So I'll do most of the analysis today looking at the daily time frame, because there's a lot that is setting up, and if you rush to lower time frames, you might miss the overall movement. All right, so we're looking at this move last week. So remember I told you guys, so we're coming off of this movement to the downside, where price has been moving to the downside, making lower lows and lower highs. So you could see this, like even a blind person could see this per se. So you could tell price has been moving to the downside. All right, so we was in this downtrend, and then eventually we had this break out like this, and this is what I was looking at last week when I did the forecast. I said once we have price breaking out, the difficulty is actually knowing when these buyers are going to stop. But if you can tell with certainty where these buyers are going to stop, like if you can tell, all right, the buyers are going to stop here, then it becomes easy for you to look for a reversal to the downside. Now the reason I was saying this is because I don't look at higher time frames like the weekly and the monthly, and the highest time frame I look at is a daily. But when you look at this move to the downside and this bridge of price to the upside, if you look at it from say the monthly and the weekly, what you're seeing here is price moving to the downside. This is simply just an impulse, maybe on the monthly or 3-month chart, or let's say the 5 months, the 6 months, or even the yearly chart. That's just an impulsive move to the downside. And what you see here as buyers in control, this is just a pullback. So if you have something like this, you can tell that once the pullback stops, so if you can tell when the pullback's coming and it stops, you should expect prices to drop again to the downside. So that's what I'm looking at on the DXY and from the daily time frame. So the long term for me, so this is my long term focus on the DXY. So the DXY for me has to drop to 102. So this is what I'm looking at, the move to 102, just going off of psychological numbers. So first of all, we need to see the reaction at 103. If we see buyers finding it difficult to go past 103, we should expect prices to drop all the way to 102. Now once prices drop at 102, you should expect say a reaction from there, but then a further drop again to the downside, giving you a move like this. So I'm looking at a very massive play on the DXY. So the levels I'm looking at 102 and 101, and possibly we could even have prices coming all the way to 100. So those are that's the possibility I'm looking at on the DXY. So it's going to take time for this to play out, but you understand how important this is. So the first thing I need to see is that inability for prices to go above 103, and we've really struggled at this point already, but we need more price action to tell us what's actually happening at 103. So when you look at lower time frames, I think the 4 hours, the 8 hours, and the hourly, you might see some kind of consolidation around here, and that's just price telling you there is this difficulty for prices to go past 103. So you should expect prices to drop again to the downside. We're looking at 102, and a further drop we're looking at 101 and maybe this area. So there's also a high possibility we might be testing 100. Now this is going to take time, so it's going to take a lot of time. So it's going to take a couple of days. So we're looking at maybe a week and so, or a week and maybe 4 days for this to happen. Now it just depends on price, because if price starts dropping and you have a consolidation, then it's going to take longer. You might have something like this consolidation and it takes longer. So but bottom, like what I'm looking at is just for prices to drop to the downside. So all right, cool. So that's it from the daily time frame, and let's say we look at maybe the 8-hour time frame. So when I step down to the 8-hour time frame, what I'm looking for on the 8-hour time frame is just for me to understand what's happening as prices moving to the upside. So as these buyers are coming in, knowing we've moved from this downtrend, and as these buyers are coming in, so my aim here is just to study this movement to the upside and see what's actually happening. So price is going to put in structures on lower time frames, And if you can tell that this structure is getting violated on lower time frames and that difficulty around this point, then you should expect the DXY to start selling. But if you don't see this failing on lower time frames and for prices to move to the upside, then we have to continue looking for buys on the DXY. So let's look at the 8-hour time frame real quick. All right, cool. So on the 8-hour time frame, so once I step down to the 8-hour time frame, I'm no longer looking at this downtrend and stuff like that. So my interest right now is just with this trend right here. And so we use two principles. Again, you know already, there's two principles I use. So the first one is just the psychological levels and the other one is a trend line. So looking at it from the 8-hour time frame, quick question: where is price currently trading at? And if you look at it, price is currently trading around 103. And where is price most likely going to move to? It has to go to 102 if we see this inability at this point. So I know there's a long-term bias for prices to drop to the downside on the DXY, but temporarily we need to go, I think, one step at a time. So if you find it difficult to go above 103, the next level has to be 102 at an area like this. So let's see if there's anything that makes sense on the 8-hour time frame. So you have this impulsive move, you have a pullback, you have another impulsive move, there's a pullback, you have an impulsive move, some kind of a consolidation. For me, this is just a pullback, and we've had another impulsive move halting around 103. We've had a pullback. So if this finds it difficult to go past this point and take out this area, then that's an early sign, or those are indications that price is going to move to the downside. Now if this price starts moving to the downside, 102 is the next target for me, and the long-term move has to be 101 and maybe 100. So temporarily we need to see prices failing to make new highs, and once prices fail to make new highs, combining, so let's say you combine the trend line and say the psychological levels, you can put a trend line here on the 8-hour time frame, something like this. So just looking at this trend line, you can tell already price is breaking out of this trend line. So you have this massive move, pullback, massive move, pullback. There's a massive move or an impulsive move. There was a pullback. You had another impulsive move, and price didn't really respect the trend line. So looking at it right here, you can say there's a breach of this trend line. And once you have a breach of this trend line, you should expect prices again to test this psychological level. You should even expect prices to test these highs, and once it finds it difficult to do something like breaking these highs or taking out this psychological level, it's a no-brainer because price has to start moving to the downside. So when you combine this with what was looking at on the daily time frame, knowing that prices on the daily time frame was putting in a structure like this on this bridge, which on say the weekly or the monthly should simply be an impulse and a correction for prices to move again to the downside. When you start looking at lower time frames, you can tell. So now the details on lower time frames starts making sense to you or to me, because an inability for prices to go past this point tells you, all right, price is moving to the downside, 102, and if we go through 102, we should look at 101. You combine this with what's happening on the daily time frame and all the stuff I told you about already, that's a clear indication that price has to move to the downside. So the long-term bias for me on the DXY is for prices to move to the downside, and I could be wrong. So that's the thing, so I could be wrong, but the beauty about doing a market focus is when you get wrong with your analysis, it takes like a minute or two to see where you went wrong, and you can correct it and then take trades in the opposite direction. So the focus is always very important because it gives you a foundation to work with, and if you see price doing something else, it becomes very easy for you to switch and look at other possibilities. So let's say price finds it difficult to go through 103 and we see sellers coming in. There could be a possibility where you get a pullback like this and you see prices moving back to 103. So those are all possibilities as well. So because you have to treat this as a trend on its own, and you have to treat the daily trend and stuff like that on like separately. So price has to complete its movement on different time frames just to deliver to higher time frames. So looking at it from the daily, stepping down to the 8-hour time frame, this point right here is my point of interest, so I'm going to make it bigger. This point right here is my point of interest. So 103 is my point of interest. This highs that came in is another point of interest for me. So we have a psychological number of 103 here. Price had this impulsive move, came back. We've tested this on the 8-hour time frame, but I'm going to step down maybe to the 4-hour and the hourly just to see how this test came in, and if there's possibilities for us to have another test of an area like this, or even try to take out these highs. And if it fails to do stuff like this, you should expect prices to start moving to the downside, and the next level has to be 102. So coming into next week, let's focus on taking prices to 102, or let's focus on seeing prices moving to 102. So that's my bias coming into next week, to see if prices can drop all the way to 102. So I'll look at the 4-hour time frame real quick. So we'll still have the same trend line I had on the 8-hour time frame, and what you can tell again, you see the move. So on the 4-hour time frame and the hourly time frame, you have impulse, correction, impulse, correction, impulse. It failed to correct and take prices to the upside. Now you've had prices trading outside this trend line, which you can look on the 8-hour time frame, you can look on the 4-hour time frame as well. Now let's combine two things here. So the first thing is price is moving to the upside on the 8-hour time frame and the 4-hour time frame, and if for any reason you don't want to look at the daily time frame for now, let's work say with the 8-hour time frame and the 4-hour time frame. So let's use the trend, the current trend, which you can clearly see on the 8-hour time frame, the 4-hour time frame, and maybe the hourly. If you use just these time frames and you see prices moving to the upside, so currently price is trading outside this trend line, so we should expect some sales to come in, and the level I'm looking at is 102. So looking at this failure for price to react from this trend line and take out these highs, combining it with this psychological level, it just gives me a lot of I have a lot of confidence that this stuff has to drop to the downside to 102. And again, as I said, I could be wrong because prices could move again to the upside, but I need a directional bias for me to work with next week. So that's my directional bias, is for the DXY to drop. So as I step down to lower time frames, it's the same thing. I could step down to the hourly, and you can go as low as the 5 minutes even, but if you understand what's happening on higher time frames, it makes it, trust me, like really easy. So that's it on the 4-hour time frame, and we'll look at the hourly. So the hourly is the last time frame I look at, and when I look at the hourly time frame, I use the hourly time frame for executions. I don't use the hourly time frame to analyze a lot compared to the daily and the 8-hour time frame. So let's look at the hourly time frame. This is the time frame for entries for me. So if I had to trade, if I had to trade the DXY, let's say for the sales, this is what I'll be looking at. So first, we could take sales around here, and I'll just put my stops above this area, and this is what I'll be looking at for prices to drop to an area like this. But massively, or if you look at the move from the daily time frame, I'm looking at a move all the way to the downside. So here, that's 1:5 and maybe 100. So I'll just edit this real quick. So if I was trading the DXY, this is what I'll be looking at an area like this. So put this like this. So this is what I'll be looking at on the DXY, and that is say 1:8. So I'll be looking at a move like this on the DXY for prices to drop all the way to the downside like this. First area of interest for me, 102. The next area of interest for me, 103, and the final bust up has to be 100. So that's the move I'm looking at on the DXY. Now once you have this directional bias, or I'm going to work with this directional bias unless price shows me something else. So with this directional bias of price moving to the downside like this, so if I take this out just to make it clean, with this directional bias of price moving to the downside, we can look at other pairs. So before we look at other pairs, let me show you something on the hourly time frame real quick. I'll show you something right here. So you had this impulsive move, there was a correction, impulsive move, you had a correction, you had an impulsive move, you had a correction that failed to make a high, you had price trading outside, ranging, you had a break to test this psychological level, and right now price is dropping. So when I look at the hourly time frame for entries over executions, that's what I'm looking at, just the detail and everything. I'm looking for this failure, I'm looking for this difficulty, I'm looking for this inability for buyers to go to the upside so I can join the sellers to take prices to the downside. So that's my analysis on the DXY. That's my focus on the DXY. Long-term buyers on the DXY for prices to drop all the way to like say 100, but we need to go through certain levels, 102 and 101. So coming into next week, first target has to be to see prices dropping all the way to 102. So that's it. It's going to be difficult to see prices dropping like this. It's going to come in a wave, so you should expect prices to drop, consolidate, drop, consolidate, drop, consolidate, and maybe drop. So that's what I'm looking at. So let me clean this as well. So that's the move I'm looking at on the DXY. All right, so with these buyers on the DXY, let's look at other pairs. And so the first one has to be US30. So I'm not going to waste a lot of time on this. So now with these buyers on the DXY, just see how this is lining up on other pairs, and it makes it really easy. So this is US30 on the daily time frame. So what am I looking on the daily time frame? First thing, where is price at, and where is price most likely going to gravitate to? So we're currently trading between 42,000 and 43,000, just these two psychological numbers right here. So price tested 42,000, like this was a perfect test, and price didn't break below 42,000, so the next level has to be 43,000. So if you go back and check the screenshot on what I did on US30, when I took the buys on US30, two principles combined. So the first principle was a trend line, so price was moving to the upside. The next principle was the psychological level. We had an impulsive move, we had a pullback, we had this consolidation here with difficulty for prices to go through the psychological level of 42,000. So I took these buys and I was expecting prices to take out these highs and probably test 43,000. So I closed my trade once this pullback started coming in, because I was thinking there's a possibility we could see prices dropping all the way here for us to take buys. So that was what I was actually waiting for when I closed my trades, to see prices pulling back to that daily trend line so I can take buys or maybe scaling. And so I closed the buys already on US30. All right, so currently price is trading between 42,000 and 43,000. So the next level price has to go to has to be 43,000, and this is quite easy. So if you want to get involved on this trade on US30, you see this trend line right here. If this trend line stays intact, then it's a no-brainer as well. So you could see prices pulling back for you to take buys. Now you might not see prices pulling back to this trend line on the daily time frame, and I'll show you why price might not pull back to this trend line on the daily time frame. And that's because on lower time frames there is something else that's building up, so you can use those lower time frame structures to play or to look for trading opportunities to play with. So that's it. So with US30, the long-term buyers for me on US30 as well is to see prices pulling back and you look for buys. So we'll keep looking for these buys on US30 as the DXY keeps moving to the downside. So if the DXY keeps moving to the downside, that's going to be a clear indication for us to look for buys on US30 and maybe other pairs. So we'll look at other pairs to see if there's also a possibility for us to take or for us to look for buys. So that's it. Now this is it on US30. I'll look at it on the 8-hour time frame real quick. So on the 8-hour time frame now, let me show you something. So if you're looking for something to work with on DXY currently, and there's a reason why I said it might be difficult for you to see prices pulling back to the daily trend line. So let's maintain this trend line on the 8-hour time frame and the psychological level. So this is something you can work with, because the 8-hour time frame is a massive time frame as well, so you can actually work with the 8-hour time frame. So here you had an impulse, you had a correction, you had an impulse, you had a correction, you had an impulse. So if you see prices pulling back to this trend line on the 8-hour time frame, you should expect prices to buy all the way to 43,000, and it could even go above 43,000. So that is the trend line I'm looking at to work with, so I can take prices to the next psychological level, and that's really easy. So I'm going to put this trend line from the 8-hour time frame, and I'll work with this trend line going down, say all the way to the hourly, take it up the daily. So let's step down to the 4-hour time frame. So pretty easy, again, pretty straightforward. Where is price trading at currently? Price is trading between 43,000 and 42,000. Where is price most likely going to go to? Price is most likely going to gravitate to 43,000. So that's what I'm looking at on US30. Now, how do you get involved in a position like this? You have an impulse, correction, impulse, correction, impulse. You should expect a correction, and we see prices moving to the upside. So if I had to trade US30, I'll just wait for those pullbacks to come in so I can take buys to the upside. Now you can step down to the hourly time frame just to see, but that's the time frame for my entries. So look at it again on the hourly time frame, it's the same thing. So this is going to put in a structure like this. So you see this, you can consider it like a consolidation, or you can say this is a pullback. So this price is going to do the same thing. It's going to pull back, give you that inability, and then pulling back for you to buy. So once you have the initial pullback, like here, don't take these buys because it might be difficult for this buy to take out these highs. You always want to wait for price to deliver to your trend line so you can buy from that point. It just makes it much better, because you look at these pullbacks to this area, these are extended pullbacks, so you should expect another extended pullback. So if you see prices hovering around here, that's a pullback, but it's not correct for you to go in there because the timing might not be right. So you should allow price to pull back so you can get better entries and take prices to the upside. So I have a trade currently running on NAS100, and I think maybe I might have gotten in too early as well, but I'll look at NAS100 in a bit. So wait for these pullbacks to come in. It might give you a consolidation, breakout and stuff like this. You're waiting for this so you can take buys. So if you're looking at the buys on US30, it has to be something like this. Put this right here, and I think we can probably scrape out, say, 3% from this. We'll look at something like this. Yeah, so we're looking at maybe 3% on US30. So we could probably get 3% on US30 if price pulls back properly. So that's what I'm looking at on US30. All right, let's look at the next pair, and that has to be NAS100. All right, cool. So NAS100. Now this structure on NAS100 is really looking good. Just the levels where we're trading at and the way price is building up, it just makes a lot of sense again. So quick look again on the DXY. If this has to continue moving to the downside, so forget all this consolidation that's happening here. Price is going to mess with your psychology. So just have the bigger time frame move in mind, and that you can play with these pairs on lower time frames and have really good entries. So long-term move for me on NAS100 is to see prices going to the upside. So that's a long-term move, to see prices going to the upside. So two questions. First, is there a psychological number we can work with? Is there a trend line we can work with? So when you look at NAS100, price is giving you these things like really easy. You have an impulse, you have a correction. You have an impulse, you have a correction. So now you're having another impulse. So we should expect these prices to test 21,000. So what psychological levels are we playing with? We're playing with 20k. So that's 20,000 on NAS100, and we're playing with 21,000. So we're playing between 21,000 and 20,000. Now, how is price reacting around this 20,000 level? We had an impulse, we had price moving to the downside, and we had buyers taking prices above 20,000. So we haven't really had a test of 20,000 ever since price moved again to the upside, and this could be a possibility. And that's why I told you there might be a slight possibility that my entries on NAS100, because I have another buy position on NAS100 currently, there might be a possibility that I got in too early, because this thing could pull back to have a test on this area, and then for us to take this buys. The only reason this might not happen is if you step down to lower time frames and you have a trend in here. So let's look at this on, say, the 8-hour time frame real quick. All right, cool. So I'll put the 8-hour time frame here, and I think there might be, so we'll have this on the 8-hour time frame. like this. So we have this trend on the 8-hour time frame, and we'll try to work with this trend on the 8-hour time frame, like so. All right, so this is it, and that's why I took this buys on NAS100. So first of all, yeah, I'm gonna put this, keep it locked in, take it out. All right, cool. So we have this trend line, and we can play with it all the way to the downside. So I have my buy position currently on NAS100. So the same principle I'm explaining. So where is price most likely going to gravitate to? It has to be 21,000. So currently we're moving away from 20k, which is 20,000 right here. So the next level has to be 21,000. So how do you get involved in a position like this? First question, is there a trend line you can work with? Not work with. So I think I'm getting tired. So is there a trend line you can work with? And that's yes, because you have this move here. There's an impulse, there's a correction, there's an impulse, there's a correction, there's an impulse, correction, impulse, correction, and that's why I took this, and that's why I took this buy. So the quick question is, where is price most likely going to move to? And it has to be 21,000. So once you step down to lower time frame, all you're looking for is just a possibility for you to buy, so you can align yourself with this trend line on the 8-hour time frame. So what happens if I get a violation of this? If price starts trading outside this trend line, then it's telling me we'll probably see prices testing 20,000. We get an inability around 20,000, and we'll move again to the upside. So normally I was looking for prices to take out this like impulsively. We should see prices taking this impulsively, like taking out this highs impulsively. So this one I'm looking at, an impulsive break of this area like this, a pull back to this area, so we can scale in and take prices again to the upside. So that's what I'm looking on NAS100. But again, as I told you, I could be wrong, and there's a possibility I probably got in too early, and so you could see prices coming back to test 20,000, and you see prices moving again to the upside. So long term on NAS100 is for prices to move to the upside. I have a buy position here because I'm working with this trend line from the 8-hour time frame, and I understand we're trading away from say 20,000, so we should expect prices to move all the way to 21,000. All right, so I'll look at it from the 4 hours and maybe the hourly as well. So let's see in the 4 hours. So on the 4 hours again, we had this move correction, impulse correction, impulse correction, impulse correction. We had this move and price came back here. So once I saw prices coming back to this trend line and an inability for prices to drop and take out this area, so this is for me, this area right here, we're still protected. So I'm going to clean this. So impulse correction, impulse failed to take out this area, price came back, price didn't take out this, so I have a stop loss below this area. So this could take me out, and that's fine, but I'm just showing you what I was looking at while taking the trade. So you had this move, inability to take out this, and then massive push to the upside. So I'm still expecting this to continue to the upside if this trend line has to keep respecting its move to the upside as well. So that's what I'm looking on NAS100. I'll probably look at it hourly. All right, cool. So I'm currently in a drawdown on this one. So I had my entries right here. I had the entry right here. So my stop loss is right here. So I'm expecting we could see prices bouncing off of this and then moving again to the upside. So that's what I'm looking at on NAS100, and I'm going to keep this bias on NAS100 unless this trend line gets violated. So if this trend line gets violated, it's going to take me out. That's minus 1%, and we'll wait for prices to pull back, see how the sellers are interacting from 20,000. Difficulty on inability to go through this point, telling you buyers are still interested in this area, and we can take prices again to the upside. So that's it for me on NAS100. So I'll probably look at say probably look at the S&P right now. So again, I'm really holding NAS100 because I'm looking at this. Once we start having this drop on the DXY, once the drop starts coming in on the DXY, this guy should start moving up. But if the drop doesn't come on the DXY, then it's going to invalidate this for me. All right, let's look at the S&P 500. S&P 500, NAS100, similar movements as well. So first thing, what levels are we playing out? Is there a trend line you can work with? So the daily time frame, again, the highest time frame. So first things first, price moved to the upside. There's a pullback, impulsive move, pullback. So we should expect another impulsive move, a pullback, and for prices to continue moving to the upside. So what levels are we trading off of? Now let's look at the levels. So on the S&P 500 currently, we're playing within, say, 5,700 and 5,800. So price just tested 5,800. It's currently trading above 5,800. So I'm going to pull this up. Let me make this a little bit bigger, like this. All right, so price is currently trading above 5,800. So we could see prices coming back to test this area of 5,800. If price stays above 5,800, it could consolidate, get a top of this trend line, and you start seeing prices moving again to the upside. Long-term buyers for me on the S&P is to see prices moving to the upside. All right, so what's the next level price can get to? So if this is 5,800, I'm just going to edit this one, so we'll get the next level we're headed to, and that should be 5,900. So this is the game plan for me on the S&P 500. Now this is a pair I trade a lot. I trade the S&P, NAS, US30, gold, and BTC a lot. So it's quite easy once you've played around with certain pairs for a long time to see the moves even before it happens. And sometimes I'm wrong, but sometimes I'm correct as well. So now you had this impulsive move, you had a correction, inability around 5,700. We've had another impulsive move. So there's two things that can happen if you're trying to get involved in the S&P. So long term on the S&P is to see prices moving to the upside, and remember, long term on the DXY for me is to see prices moving to the downside. So I'm using this principle to look for entries on the S&P. So long term, see prices moving to the upside. Currently, price is trading around 5,800. So the next level price can move to has to be 5,900. So the big question is, how is price going to move all the way to 5,900? So we could, two things, we could see this area taken out. So you see price pulling back to this trend line, and you see prices moving to the upside, or you get a consolidation around here, a spike, test of the trend line, and you see price moving to the upside. So those are all possibilities, but I think the most important thing is having this directional bias. Like if you can tell where price is going to move to, then you can step down to lower time frames and look for a setup, look for a setup that aligns with your principles, and you take this trade. So let's look at the 8-hour time frame on the S&P. So I'll try and put a trend line here and see what's happening, because let's see, put this right here. All right, cool. So just like NAS100, the S&P 500 as well, you have this trend line you can work with. So we're going to work with this trend line unless it gets violated. So this is what price is currently doing. You had this move, you had a pullback, you had this impulsive move, you had a pullback or a correction, you've had this impulsive move, you've had a pullback, and now price is moving again to the upside. So looking at it from the 8-hour time frame, I'm expecting prices to continue moving to the upside and giving you probably some pullback. So you can see pullbacks coming in, testing this trend line, and you see prices moving again to the upside. So a quick take on this, right? This is very interesting on the S&P 500. So look at what's happening on the 8-hour time frame, and if we're trying to get involved to take prices to the upside, now we're trading above 5,800. We could get a test of 5,800. Now if you have a test of 5,800 and you have a test of this trend line, this is like two things happening at this point right here. So if you get prices coming back to test the psychological level, you get prices pulling back to have a test of this trend line, you see that inability at this point for prices to break to the downside, telling you buyers are still involved, then it's a no-brainer. We should expect prices to move to the upside. So that's what I'm looking at on the S&P 500, and that's not this can take you less than 10 minutes for you to have a directional bias and play with. So we'll step down to the 4-hour time frame and just see what's happening. All right, so on the 4-hour time frame, again, impulse, correction, impulse, correction, impulse. You should wait for a correction, test of the trend line, test of the psychological level, look for a setup around here to take those buys, and the next level has to be 5900. Now if this trend line gets violated, so let's say you're looking at this and price pulls back, violates, and does stuff like this, you should expect prices to then drop to the downside. So that's what I tell you, once you do your focus thing and price plays out differently, it becomes very easy. So if I'm looking at this and price does this, break, test, inability here, okay, we could see some temporal sales coming in, and that's easy because I had my directional bias set in already and price is doing something else, so it becomes very easy for me to have a switch. So that's a 4-hour time frame. I'll look at the hourly. So let's look at the hourly and see what's happening. Let's see. All right, cool. So on the hourly time frame, we had an impulse correction, impulse consolidation or a correction all the way to this point. So we've had this impulsive move. So if you're trying to get involved on the S&P 500, so the question has to be, how do you get involved in the S&P 500? So now let me show you something real quick. You see this movement here, you see this move, pull back, this correction, you see this move, pull back, move, correction. You should expect a similar move here. You should see a move, a push, you see a move, some sort of a consolidation or a correction right there, and you see prices moving again to the upside. So that's how I'm going to tackle the S&P 500. So once you get a pullback here, don't try and buy this thinking you're going to take out these highs. Wait for it to consolidate, do all this massive movement or this slowdown, wait for it to finish, pull back to an area like this, wait for all of this to finish, pull back to an area like this, look for your entries here, take those buys, look for your entries here, take those buys. So I'm looking for entries around this point to take buys again to the upside. So that's it on the S&P 500. So yeah, I think that's quite easy. And let's look at the last pair, and that's going to be gold. All right, cool. So if you remember, I think I showed you guys already, I have a buy position on gold. So the same principle, guys, is a very simple thing. So I'm gonna show you. So before we come down and look at the analysis and everything, look at this trend line right here, look at this psychological level right here. So I had my buys, I think, somewhere here. So the next level has to be 2700 for me, and if we can take out this area, that's it. I think I'll be good with that. That will be, I think, 4% just on that move. All right, so let's look at this. What's happening on gold, what's happening on the daily time frame, and how do we get involved in a situation like this? So first things first, where is price currently trading at? So we're trading between 2600, which is this level right here. We're trading between 2600 and 2700. So just understanding this, one side level to the next side level, I think it gives you an edge. So we're trading between 2600 and 2700. So how do we get involved? There's a trend line on the daily time frame, so we can look at this trend line on the daily time frame. So now there's a possibility for this to pull back to an area like this, and you still see buys going to the upside. That's the first possibility. Second possibility, you could see gold just continuing its move to the upside without giving you this massive consolidation all the way to this area. So those are the possibilities. So the first thing is we're trading between 2600 and 2700. There's a trend line on the daily time frame, so we're still headed to the upside. So the first thing we have to look at is for price to take out these highs, and if price takes out these highs, then we could expect prices to test 2700. So we'll probably look at lower time frames to see what's happening. Now the big question is price going to go above 2700? Now I can't tell you if price is going to go above 2700, but what I can tell you is price is likely going to test 2700. So you need to take it one step at a time. one level to the next level, you wait for price to react, and then you see prices moving it to the next level or above that level. So looking at it from the daily time frame, we're currently moving to the upside, and as I told you, there's a possibility for us to see prices pulling back for us to move again to the upside. So I'll look at it on the 8-hour time frame. So let's look on the 8-hour time frame. So currently there's no trend, so there's no trend on the 8-hour time frame I can work with. Like currently, like right here, you should normally see a trend you can work with and play with as price is moving to the upside. So on the 8-hour time frame is not visible, so the 8-hour time frame on the daily, I'll use the same level. So the same trend I'm using on the daily is the same I'll just use on the 8-hour time frame. Pullbacks, look for buys and stuff like that. So let's look at, say, the 4-hour time frame, because the 8-hour is not really clear. Same thing on the 4-hour time frame. You can see, all right, so on the 4-hour time frame, you have this, there's some sort of a pullback, you have this move, there's a pullback, and you have this move. So you should expect a pullback to come in. So on the 4-hour time frame, let's look at this. So how do you get involved on gold, to buy gold or to get involved on this trade? So let's look for a trend line we can work with. Put a trend line here, and I think there's a trend line we can work with. All right, cool. So that's it on the 4-hour time frame. I'm just going to keep this right here, make sure it stays and goes all the way to the hourly. All right, cool. So we have this on the 4-hour time frame. So the question is, how do you get involved in a situation like this? So if you didn't get in, say, around here, I think I got in around here. So if you didn't get in on this move that's taken off already, how do you get involved moving forward? So you have pullbacks, you should expect a pullback to an area like this for you to take buys. So if this trend line on the 4-hour time frame, which is the same trend line I'll use on the hourly, if this trend line stays intact, then every pullback that comes in is an opportunity for you to join the buy. So take note, we still have to take out these highs, or we need to test these highs. We should be testing these highs and testing the psychological level. So there's still enough room for us to play with. So let's say you get a pullback that comes in. Let's look at this. Let's say you get a pullback that comes in and you get your entries here. You could squeeze out maybe 1:3 from this. Yeah. So you can squeeze maybe 1:3 from this gold move right now. So all you have to do is wait for pullbacks to come in. So I'm just going to take this out and we'll step down to the hourly time frame. All right, cool. So on the hourly time frame, this is what I'm looking at right here. This is what I'm looking at. So trust me, every pullback that comes in, so you see this move, there's a pullback, this move, there's a pullback, there's an impulse, there's a correction, there's an impulse. Wait for a correction to come in and you take the buys to the upside. So once you're looking for these buys on, say, gold, pay attention to what's happening on the DXY. If this guy starts dropping, trust me, you should have good entries on gold for you to take prices to the upside. So there's still enough room for us to play to the upside, because I'm looking at 2700. So there's enough room for us to play to the upside, and you can have at least 1:3 from that move. And if you squeeze it properly, you'll probably come out with like 4% or 5%. So there's just other entry techniques you can do just to have a better stop loss and a tighter stop loss as well. So remove like that, it goes from 1:3 to maybe 1:4.5 or maybe 1:5. Yeah, but if you squeeze it too tight, it might take you out as well. So how do you get involved on gold? I showed you already. Wait for the pullbacks to come in, so you can work with this trend line. So look at it, pullback, pullback, pullback. Wait for this pullback for you to buy again to the upside. So once you're waiting for the pullback to come in, you need to, the timing is very important as well. So watch the DXY, watch your pullbacks coming in. Once you see that the pullback is failing to take out this trend line, just as what was happening here, if you get a similar move around here, you don't have to hesitate, just go in with your buys again. So wait for your confirmations and stuff. For you, the confirmations might be different. I have my own confirmations, I have my setup I'm looking at. So the funny thing is, I'm gonna show you something real quick. I think we're almost up on time. The funny thing is, Once price is pulling back here, there's a lot of people that find it difficult to buy if they see price is pulling back to the trend line multiple times, I think above 3 times, because most people say once price pulls back 3 times on the trend line, the fourth one is going to fail. Now price can pull back many times on the trend line and I'm still going to buy. It just depends on the overall picture, like what you're looking at and where you're headed to. So I keep preaching this and I keep saying this. You look at this on the daily time frame very quick. You look at this move on the daily time frame, and the simple question you ask yourself is, where is price trading at and where is price most likely going to gravitate to? If you can answer this question correctly, it makes it very easy for you to do a forecast and for you to do a trade execution. So coming into next week, I have this at the back of my mind. I'm expecting prices to move all the way to 2700. So all I have to do is look for possibilities to get involved in a situation like this. So on a daily time frame is very difficult, so all I have to do, step down to like 4 hours, and on the 4-hour time frame I start seeing this trend thing I can work with. So now I just have to go down to my execution time frame on the hourly. So on the hourly time frame, this is what I'm looking at. So impulse correction, impulse correction, impulse correction, impulse, wait for a correction for us to get in. So if I had to trade this next week, once we have everything coming in, like the pullbacks, once it settles, like once the pullbacks come in and then it settles down, the dust is settled and everything, I should be looking for a buy, put my stops here and look for something like this. So at least 1:3.5 or 1:4. It just depends on what price is going to give us. So that's it, guys. So that's the market forecast for next week. It's going to be for me a lot of buys unless price does something else. So on the DXY, expecting the drop. On the S&P, expecting this move to the upside. On NAS100, I'm still expecting this move to the upside. I'm currently in a drawdown, just a little bit. Yeah, currently in a drawdown. On US30, wait for these pullbacks to come in, possible buys again. On gold, wait for these pullbacks to come in. So I have a trade currently running, so now this is pulling back. So it's, once the pullbacks are coming in, it's going to cut into my profits like that. But again, you have to let price pull back, give you opportunities to scale in. So wait for the pullbacks to come in. You look maybe say 1:3, 1:3.5, and you go in. If price does something else, and let's say the DXY starts moving to the upside, it's going to invalidate all the setups I'm looking at on gold, US30, NAS100, S&P, and on BTC as well. Alright guys, I hope you found this interesting, and remember, you have to trade patiently and be consistent with everything you do. And if you really found this interesting, if it's helping you, don't forget, hit that like and subscribe button. See you during the next one. Bye for now.